Are you curious to know what Cathie Wood, the queen of disruptive innovation, is buying in this volatile market? Wood has been busy buying up shares of some of the most innovative companies as the market declines. But with concerns about overvalued stocks and a portfolio of over 50 companies, will Cathie's investment strategy pay off in the long run? Stick around to find out. You are watching Growth Mentality. Take a pause here to subscribe before we dive into the topic. Cathie Wood was the queen of investing, the champion of innovation stocks, and the apple of investors' eyes. But as they say, fortunes can change in the blink of an eye. Over the past year or two, Cathie has had a rough ride, with her portfolio plummeting from $83,700 to $18,700. That's a hopping loss of 77.6%. 3/4 of her fund's value wiped out in the blink of an eye. It's no surprise that many people have given up on Cathie, but before we write her off completely, let's take a step back and look at the bigger picture. Despite the recent turbulence, Cathie's overall returns over the past 8 years are still up by 87%, compared to the market's 124%. Many hedge fund managers have performed much worse, so Cathie may deserve more credit than she's getting. But what is Cathie doing now to prepare for the future? Well, wonder no more. Here is the list of top 10 stocks Cathie has been buying lately as the market tumbles. Investment in Roku.
Roku, Zoom, DraftKings, NMDM. Any of those you want to give a little insight on?
Well, Roku, everyone asks, okay, there's a huge transition from linear TV to streaming TV, and what would you invest in? Or where would you invest given the $70 billion of linear TV advertising dollars that are going to disappear and go somewhere? Where would you invest? Most people would say Facebook, Google. We would say a lot of people know that. That is no surprise. The surprise is Roku. Roku is becoming the operating system of streaming TV, of connected TVs, and Amazon are in competition, so to speak. But Roku put its own channel. It has started its own channel and is starting to buy content for it. Quibi is one example. It has just moved on to Amazon's platform as well. So we think those two, certainly in the United States, are going to take the lion's share of the connected TV market. And Roku is moving internationally and is finding really good success. And I think that's an upside that many people don't anticipate.
Cathie Wood has made a significant investment in Roku, a company that makes media players for streaming services. Despite the popularity of the product, Roku's stock price has recently taken a dip due to the market crash. Therefore, analyzing the company's fundamentals is important before deciding whether to invest. The company's revenue has increased from $512 million in 2017 to $3.1 billion in the last 12 months. However, the company has had inconsistent income, with losses in 2017, 2018, 2020, and the previous 12 months. This has affected the stock price, which has dropped from a high of $473 to just $50 per share. Although there are no guarantees that the stock will rebound, the current market conditions could present an opportunity for investors to get in on the ground floor of a potentially profitable growth stock. It's a bold move, but then again, when has Cathie ever been one to play it safe? Cathie's crypto bet pays.
I'm assuming, Cathie, that you're going to hold to your Bitcoin forecast for, $1 million per coin by 2030. That still feels good to you?
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop. Because they'll understand it more.
Cathie Wood has a knack for finding diamonds in the rough, and her latest bet is on Coinbase. Despite the crypto market taking a nosedive, she's putting her money where her mouth is and investing $192 million more into the stock since 2022. Yes, you heard that right. She's doubling down on a company that's lost 83% of its value. But she's got a good reason for doing so. As the second largest crypto exchange, Coinbase is well positioned to benefit from the long-term future of cryptocurrencies, and Cathie is confident that her investment will pay off in the end. Listen up, kids and grown-ups. Have you ever heard of Roblox? If you're 10 years old, chances are you're already a fan. But if you're 18 or older, you might have missed the hype. Cathie's Roblox bet. Roblox is an app that lets users play games, create games, and chat with friends online. It's like gaming with social media, perfect for the younger generation. Over 164 million users are actively engaged with Roblox every month, with more than half of them being children under the age of 16 in America. Cathie Wood has been putting her money where her mouth is, and in 2022 alone, she's invested a whopping $185 million in Roblox stock, making it her third largest stock buy during that period. But here's the catch. While the revenue has been increasing from $325 million in 2018 to $2.2 billion over the last 12 months, earnings have been heading in the opposite direction, from minus $88 million to a minus $777 million over the same period. That sounds like a risky bet, right? But not for Cathie. She's a long-term investor who believes in the future of growth stocks. And while Roblox's fundamentals may not look great now, Cathie is confident in the company's potential for future success. If you're into stocks, you know how exciting it can be to find companies with huge potential. But sometimes it can be tough to understand what these companies do. Genomic investments potential risks. Cathie Wood's investments in Twist Bioscience and Verve Therapeutics indicate her positive outlook on the genomic sector's potential to solve human diseases. Twist Bioscience produces DNA products, while Verve Therapeutics specializes in gene-editing medicines for cardiovascular diseases. Cathie invested $70 million in 2.8 million shares of Twist Bioscience and $60 million in 2.9 million shares of Verve Therapeutics. CRISPR gene editing has opened up possibilities for identifying and correcting mutated genes in the genome, leading to the potential identification and elimination of cancer in stage 1 in the next 5 to 10 years. However, the success of genomic companies in the long run and whether people will pay higher prices for stocks is uncertain, given the unpredictable nature of the tech industry, where only a few companies succeed while others fail. Whether you have experience in trading or are new to it, it's important to keep an eye on these companies. Who knows? You can find the next big thing in the stock market. Cathie Wood's Unity investment. Cathie Wood invested $87 million in Unity technology, purchasing 3 million shares. However, the value of Unity has decreased by 84% in the current market climate, dropping from $196 to only $31. It's worth noting that growth and innovation stocks tend to suffer when the Federal Reserve starts tightening at the end of a bull cycle. Holding on to these stocks during this time is not the best idea. Now, Unity is a lot like Twilio in that its revenue is increasing, but its profit is decreasing. This is a common trend among growth stocks, as they tend to invest heavily in their own business, resulting in a loss of profit. Some investors avoid these types of companies, but other growth investors like Cathie Wood are drawn to them. So, what does this mean for you as an investor? Well, weighing the risks and benefits of investing in growth stocks is crucial. While they may have the potential for long-term growth, they can also be quite volatile in the short term. To stay up to date with Cathie Wood's investment strategies and gain an edge, make sure to watch until the end and subscribe. Investing in genomic and relatable stocks.
Our geneticists, and you're going to have one, so am I, are going to be able to identify for the first time the needle in the haystack. They're going to be able to identify which genes in our genomes have mutated. In other words, they've developed a programming error. And now with CRISPR gene editing, following it up, we're going to be able to correct those programming errors. It's going to be incredible to catch cancer in stage 1 and then edit it away. We think that's going to be possible in the next 5 to 10 years, and probably sooner than that. So that's real impact.
Genomic stocks have caught the attention of investors, including Cathie Wood, who recently invested $70 million in Twist Bioscience and $60 million in Verve Therapeutics. Twist Bioscience produces DNA and DNA products, while Verve Therapeutics specializes in gene-editing medicines for treating cardiovascular diseases. With the advent of CRISPR gene editing, geneticists can now identify and rectify mutated genes in our genomes, leading to exciting possibilities such as identifying and eliminating cancer in stage 1 in the next 5 to 10 years. Despite the promising potential of genomic stocks, it remains uncertain whether people will be willing to pay higher prices for these stocks and whether these companies can cure diseases while still making a profit. The tech industry has had several failures in the past, with only a few companies becoming immensely successful. It is yet to be determined which genomic companies will prove to be successful in the long term. In contrast, DraftKings is a more relatable stock for many investors. They are a fantasy sports contest and betting company that allows users to participate in daily and weekly contests and win money based on individual player performances. However, like other growth stocks, DraftKings fundamentals are not the strongest because they spend all their money on growth, resulting in negative profit and a weak balance sheet. Although their revenue has grown from $191 million in 2017 to $1.8 billion over the last 12 months, their expenses are almost double their revenue. DraftKings is currently valued at $6 billion, and its success in generating higher revenue and profit in the future depends on the investor's assessment. Investors must weigh the potential of genomic stocks with the risks and rewards of growth stocks, such as DraftKings. The story about Cathie Wood's latest buys doesn't end here. Balancing risk and innovation. Cathie Wood purchased $35.6 million worth of CareDx shares, adding the company to her top 10 holdings as the market declined. Although she maintained her position at Tesla, she refrained from making any recent purchases despite its lower stock price. However, Wood's approach raises concerns. Firstly, she is willing to pay high costs for innovation stocks that are not yet profitable, which is contrary to Warren Buffett's principle that no stock is worth an infinite price. Secondly, she holds positions in too many companies, making it difficult for her to have an intellectual advantage over other investors in each one. Nevertheless, Wood has acknowledged her mistake and reduced her flagship strategy from 58 to 35 names, selling off 22 stocks. Her returns of 87% lag behind the market's 124%, but it is still too early to make a final judgment on her performance, and her future performance will be worth watching over the next 5 years. There have been concerns about Cathie Wood's investment strategy. She has recognized her errors and streamlined her holdings. The future performance of her investments is yet to be determined. To receive more investment insights, please subscribe and hit the like button if you found this video helpful. And as always, remember to do your research before making any investment decisions. See you in the next video.